Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, June 21st, and we're going to take a look at a couple of the trades from the futures trading room that worked out fairly well today. But more specifically, we're going to continue with the price action series, and I want to really drill home this concept of paying attention to where a market goes and how a market behaves when it breaks through support or resistance. Because a lot of times people get caught in false breakouts, and these false breakouts are oftentimes actually a really good opportunity to place a trade in the opposite direction. So what we're looking at here, this is gold, and this is one that we were watching in the trading room, and that was, we had support at 1242.4. We actually had a short coming into this on the bear flag right here, and it dropped down, hit significantly undervalued, and then bounced back up. And the thing that's important here is we broke through the support, and immediately after breaking through the support, I mean literally within a few seconds or a minute, we turned around and bounced back up above it, and we ended up closing that bar above that support level. Okay, so what that tells us is there was a lack of willingness for this market to sell off below that support. Okay, so an unwillingness for the market to go lower below the support, or a lack of sellers down there. The way you trade that is then you place the trade when you break the high of the previous price bar. So that means you'd be going long right over here, and you look to catch the rally up, which is what you got here. All right, now the exact opposite thing happened in crude oil today after the petroleum status report. So we were looking at resistance at 43.80. The report comes out, we shot straight up, broke through the resistance, immediately turned around and pulled back down, kind of chopped around, and then closed down and closed below the resistance. So it tells us the exact same thing, but in the opposite direction. A lack of willingness to rally above that resistance, or lack of buyers above that resistance. And once again, we were looking to sell it as soon as it started to break down. You break through the previous bar's low, starts to accelerate, and then you also had a micro trend right here for your secondary entry going into the afternoon. This was also the second thing we were watching. We said first target's testing the trend line, second trade opportunities breaking through the trend line. Both of them worked out perfect, just like we wanted to see. So pay attention to how market acts when going into or through support or resistance, because it can be very telling on the direction that that market's going to end up moving. All right, now when you're trading, the other thing to keep in mind is when you're trading this type of setup, we want to see an immediate reaction in the opposite direction once it triggers. So you see here we had a nice strong close down right after it triggered. With gold, we had a nice rally right after it triggered within just a couple of price bars. And that's exactly what you want to see. If it triggers and then just kind of moves sideways and doesn't go anywhere for a couple of price bars, most likely it's time to just go ahead and get out of that trade, live trade another day. It's not behaving correctly. All right. So that's all I have for you for today. I hope it helps. I will see you in the trading room bright and early tomorrow morning. Don't forget to like and subscribe if you're enjoying these videos. And until next time, happy trading.